I have a question. Why is everybody agreeing on what's causing this rally? Apparently, it all started with Michael Saylor, who started to sell Bitcoin. He always bought, but then last week he started to sell a little bit. 32 Bitcoin out of more than 800,000. That caused a cascading liquidation effect. But why is Ethereum doing worse than Bitcoin? Yes, there is a theory of inherent leverage, but Ethereum is already underperforming Bitcoin since September of last year. So that's over here. Or we could also take this point over here. This is when Ethereum moved from proof of work to proof of stake. The Ethereum price relative to the Bitcoin price looks very similar to the Ethereum dominance chart. So again, this here was the move from proof of work to proof of stake. Everybody bought Ethereum in anticipation of that event. That was then a sell the news event. And then subsequently, Tom Lee of BitMine started to buy Ethereum. And so Ethereum outperformed again. Ethereum dominance, just to quickly recap, is how much of all of cryptocurrency's market cap is currently in Ethereum. And that tended to trade between 7% and 21%. And again, in the last months, we tend to rather underperform in Ethereum. And recently, with the Michael Saylor crash, Ethereum is doing even worse. But is this potentially an opportunity since we've sold off that much and we are now at the lower end of that trading range? Is there maybe a case to be made that Ethereum should be going up from here and that it might outperform by, say, 15% from here? Hi, my name is Gerhard. I started my crypto journey 8 years ago. I hit my first million 3 years ago, and I did this mainly through actively trading. So timing the market, trading altcoins, but also trading Bitcoin and Ethereum against each other. My track record is 100% transparent. With the recent crash, we have just hit a new all-time high over the last 2 years. So that's when I started to publish my trades in real time. I made 175 trades and they on average returned 5.1% per trade. The average holding duration is 27 days, so a bit under a month. The current trades are of course hidden here on YouTube. That's part for premium. And again, every single trade can be verified. So for example, here when I shorted BitTensor Tau versus Bitcoin, that's when I entered that position. So that's the short on the 6th of April. And then subsequently for closing the position, we just took the golden cross. So there are some backtests here as well. There is some data behind all of this. This is not just random trading, but more on that later in the video. Let's get back to Ethereum. Now this is Ethereum dominance, the chart we've already looked at, ETH.D. But there's actually an adjusted version of that. And that is the Ethereum market cap. Have a look at this in the background here. ETH/total ES. Now ES stands for excluding stablecoins. So we are looking at Ethereum's market cap as a fraction of all of crypto without the stablecoin. So this is a more clean picture. And that's probably also why those tops here align better on the adjusted chart compared to the regular dominance chart. The overall picture is very similar though. We have sold off quicker in Ethereum recently, and we are at the lower end of the trading range. Now, fundamentally, I tried to stack the odds in my favor. It's already very hard to outperform with trading anyways. If there is the slightest edge that we can gain by potentially not entering a trade and be more selective, then I follow that approach. Now, what does this mean here? When the overall trend is bearish, when we tend to trend down, I'm looking for opportunities to enter short positions. So I'm looking for rallies. I short the relief rallies. I do the opposite when we are in a bull run. In a bull run, you want to buy the dips. You buy whenever the price goes down. In a bear market, we want to short the tops. Now, currently we are in a dip, but I don't think it's so great to buy a dip when overall the trend is not in our favor. It's the same as shorting an asset in a bull market. It's not a good idea. We want to be in line with the macro trend. And so that's why entering an Ethereum short right now is probably quite dangerous. Now the situation has quite an impact on the altcoin market as well, because Ethereum is highly correlated with the altcoins. The correlation between Ethereum and the alts is actually higher compared to the correlation between Bitcoin and the alts. In other words, when Ethereum goes up, the altcoins are very likely to go up as well, and vice versa. We can see that in the following chart. This is the Ethereum market cap in green and the altcoin market cap in blue. The two tend to move in sync most of the time. Yes, they do decouple every now and then, and that's potentially an opportunity, but in general, the market direction is very much dictated by Ethereum. And there are also fundamental reasons for this. For example, in decentralized finance, many altcoins are directly coupled with the Ethereum price because they are in the same liquidity pool. So many altcoins at least partially get priced in ETH, not in US dollars. Still, it's still interesting to look at the ratio. So this is the Ethereum market cap relative to the market cap of the altcoins that are not in the top 10. So that's others. And since 2017, this tended to trade in a pretty tight range. When Ethereum is expensive, it's more than 2 times as large compared to all the other smaller altcoins. When Ethereum is comparatively cheap though, it's 10% less. When Ethereum is comparatively cheap though, it only has 90% of the market cap of the smaller altcoins. ETH is currently crashing down also versus the alts. And from that metric, we might see an additional underperformance of another 20% until Ethereum is a potentially attractive contrarian bet again. Now this is ETH relative to the smaller altcoins. Here is ETH relative to all the altcoins. So this is Ethereum's market cap divided by total ES. So all of crypto excluding the stablecoin. That's currently at 50%. The bottom is at 31%, the top is at 110%, and here the risk is even higher. Ethereum could underperform by 38%. Now, here's how I fundamentally think about this. In general, crypto tends to trade in trends, but those trends only tend to turn around when the assets are historically cheap. When there are people that are willing to buy an asset against the masses because it's so cheap that the potential multiple on that investment is high enough to justify the risk. We have seen this, for example, in Bitcoin time and time again. This is the net unrealized profit and loss for Bitcoin over time. At the end of a bear market, we always tended to go in the negatives. Without the market selling off that much that the average Bitcoin holder is not in unrealized losses, it's very hard to turn around a currently bearish trend. And even with Bitcoin being at close to 60K, the average Bitcoin investor is actually still in profit by roughly 12%. We are not yet at price levels that are that low to justify a contrarian bet. The average cost basis of Bitcoin is currently at $53,000. And again, historically, we tended to fall below that at the end of a bear market. So after Mt. Gox and Silk Road collapsed, that was in 2014, 2015. Then after the ICO bubble burst and the miners sold off their inventory, then over here, that's COVID. Then over here, that's Terra Luna and FTX and Three Arrows Capital. We always had some kind of systemic implosion. We always have a reason why prices go lower. This time, it's a story that Michael Saylor isn't buying Bitcoin quickly enough anymore. At least right now, that's the story. We don't know how this bear market continues, right? Maybe there will be a centralized exchange that suddenly shuts down. Maybe there will be a hedge fund that has to quit. Maybe there will be something else, an exploit of a major decentralized finance protocol. I cannot predict what that black swan event will be. I can simply show that currently the prices are not yet historically that low that it makes sense to buy despite the negative momentum. So the realized price is the average cost basis of the entire market. The long-term holder realized price is just a subset of that market. So the long-term holders. That is currently at $49,000 roughly. And again, we tended to fall below that with every single bear market. We did not directly bounce from it, we fell below it. So have a look at this. The long-term holder realized price was at 4,400, but we went all the way down to 4,000, so 10% below that. Then over here, the long-term holder realized price being at 20K, but we were at 17K. So that's 15% below that. Now with the realized price being at 48, 49K, 10 to 15% below that means 44, maybe even $42,000 per Bitcoin. That's when I think the long-term contrarian holders will start to pick up the pieces again. But yeah, we are currently making money with that bear market. We are at an all-time high. There's also automatic copy trading. So in case you don't like to manually trade every single announcement, there are different strategies that are available again to the premium members. I want to show this quickly how this performs. So here are all the strategies that are currently running. We've got one strategy where the backtest implies that we should be making 115% over buying and holding Bitcoin. So let me quickly show you the analytics that you get an idea what we're actually doing here. We ran more than 40,000 simulations of buying and selling Bitcoin, then came to a strategy that outperforms like this very consistently. And then we also optimize the leverage. Doing all of that, we come to our target return of 152% per annum. And so given that buying and holding Bitcoin over the time period also made some return, we are targeting to do some alpha here. To be more exact, 115% alpha. So that's when we take the ratio of those two numbers. And so for the Bitcoin trend follower that started in October of last year, we've got the following performance chart. So Bitcoin went down by roughly 50% since then, and our vault went up by 1.7%. Now, this is not necessarily much, right? 1.7% since October, but in the end, we are only trading Bitcoin here. We are just timing the Bitcoin market. And the target of this vault is to accumulate more Bitcoin. It's to outperform Bitcoin. It's not just to make US dollar gains. And that's definitely achieved. So we've got now more than double the number of Bitcoins because we didn't lose any money while Bitcoin fell by 50%. And that's since October of last year. So annualized, that's almost 200% already. Our annualized performance so far since October of last year is above our backtest of 115% per annum. And so the nice thing is for almost all of our trend followers, we've got similar numbers. Here is the Ethereum trend follower. The Ethereum price is the dotted line over here. Our vault is the orange line. If you just want to accumulate Ethereum very long term, maybe this trend follower makes sense for you. Again, if you join premium, you get access to that. So the vault made 40% buying and holding ETH during that time period. That is since the middle of January of this year, lost 50%. So measured in ETH, we now have almost 3 times more Ethereum. That's annualized more than 1,000%. So obviously this will normalize at some point, but still we got a 3x versus buying and holding Ethereum. And that's a target for the ETH trend follower. We want to outperform Ethereum. And then here we've got Solana. Let me show you that quickly as well. Solana is the youngest of the vaults that started at the end of March of this year. That has outperformed buying and holding Solana by 41%, annualized 450% again. Annualizing numbers for trading strategies that have only been around for a few months doesn't necessarily show the most reliable numbers. But then also we short the altcoins, right? Most altcoins tend to go down versus Bitcoin most of the time. That's mainly because of token inflation. And here, unfortunately, we are not yet hitting our target. So we want to hit 44% per annum. That's what we got last year. This year, we are in profit. This time, we don't want to outperform Bitcoin or Ethereum or Solana. We just want to make US dollar gains. That's our reference point for the relative valuation vault. And here we are at annualized only at 27%. Not yet at the 44. By the way, this last vault is only available to the annual subscribers. Down below, you will find a link to the website, so you can have a look at my altcoin trade track record here as well, and you can have a look at the different strategies again in detail, together with the track record as well. There are links to those charts here available, and they also update in real time. And there are also links to the backtests if you're interested in learning more about that. The market is clearly struggling, and you might have noticed if you're following this channel already for a while that I also changed the avatar of this channel to this bear costume. I even have a bear costume here in the background lighted up. And I'm bearish on this channel again since October of last year already. And I got a lot of flag for that. I dare to say that probably most people here on YouTube don't outperform long term, especially if you look at the ones that told you to buy the dip throughout the entire year. They got wrecked, and so did you. And even though I sometimes publish analyses that aren't that popular in their result, I rather keep it real. The algorithm doesn't necessarily like that because everybody wants to be confirmed in their bias, but I trust in the long term. I trust in the people that are following along, that they notice actually what I said at a particular point in time, and that they stick around, and that they then will buy Bitcoin and Ethereum and various other assets when they are cheap, when we actually see that the numbers are turning around again. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on Premium. There's also a 7-day money back guarantee. So in case you don't like Premium, just email me within the first 7 days. I'll refund you, no questions asked. Thanks for watching and see you next time. Cheers.